I think their results today are a really good indicator of what's going on in the company. The U.S. stores segment is just doing very, very well right now. As you can see, they announced that they had a 2.1 or 2.2 same-store sales growth, and they leveraged expenses in the stores. Now, that was offset by some really serious and massive investments in e-commerce in the U.S., so the company delevered. And if you think about it, I think maybe one of the reasons they're in the red today, they added $5 billion roughly in sales for the quarter compared to last year, and they made less money. And I think people are concerned about their operating margin and kind of want to know where this is all going.
How is that possible when you have, I think it's 12 quarters of declining comparable inventory, which would suggest to be that's a margin positive story?
Yeah, it is. I think the answer is, when you do a deal like they did over the last couple of weeks, right? They sold Asda for $10 billion. Asda made $1 billion in operating income. They bought Flipkart for $16 billion. Flipkart loses about $1.5 billion. So they're going to have a $2.5 billion swing in their operating income just on that deal alone. And I think that might be causing some concerns. Now, to give them credit, they're doing exactly what they said they were going to do, and they're doing it very, very well. And I think, it's just going to take some time to play out. If you like that story, you should be happy with their result. And if you're about profit and operating income, you might have some concern.
Bill, who's winning the war for online grocery? Walmart is certainly the largest grocer in the country, and today in the presentation they mentioned low single-digit growth there on fresh foods and particularly private label brands. Kroger announcing this deal for an exclusive licensing agreement with Ocado today, and of course the Amazon Whole Foods question. What happens to this huge potential market?
It's a great question. I think one of the things you got to keep in mind too is that e-commerce and digital penetration of food is still very, very low. And most of the business is going to be still in physical stores for years and years to come. And so you can fight that battle, but that battle is only for about 5 to 10% maybe of the grocery segment. And you can fight that battle, and it can damage the other 90% of the business. And I think what we're seeing in Walmart's results today are probably a pretty good indicator of that. The physical stores are doing very, very well, growing same-store sales and leveraging expenses. The e-commerce business is a serious investment, and Walmart's committed to that investment. I think the answer in how this is all going to turn out is still not yet written. That battle now joined by Kroger and others is going to be very, very intense, and it's going to put pressure on operating margins for a while.
Yeah, but by the way the stock market judges things, Amazon always has the advantage there because nobody has expectations that they're going to be profitable, do they, Bill?
Exactly. I mean, Amazon has sort of revolutionized how not only we shop as shoppers, but how as investors we invest. Somehow, hyperactive growth with very, very, baseline to zero profit growth is okay. That has to play out at some stage. There has to be a solution to that. Otherwise, Walmart should just go ahead and trade all their operating income for growth and go from a $30 billion income company down to $2 or $3 billion, and they would trade it at a 300 times multiple. It doesn't make any sense. And I think as much as Amazon has changed the way we shop, it's also changed the way some investors are looking at what good is now.
Yeah, some call it a call option on growth rather than a valuation of discounted cash flow. It's just the way companies are being measured these days. You think Amazon is predatory here?
I think what Amazon's doing, and whether this, I don't believe this is intentional. I think what they're doing is trying to use the velocity and the traffic that comes with their retail business to parlay that into a growth story. And as long as the street continues to reward Amazon for the behaviors that they're doing, they'll continue to do it. And they're being rewarded mightily. I mean, they're trading at they're the golden stock. I thought they were overvalued at 400, and now they're 4 times that. And as long as investors keep buying the stock at that level based on that hyperactive growth story, they're going to keep playing in that direction. The end result is they're making money on web services and advertising in other areas and selling below cost in retail. And at some point, that's going to feel like a problem.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.